There are several fallacies in the trading world, most of which you are likely unaware of, even though they are impacting every investing decision you make. You might be thinking that because you're intelligent, you would be able to identify a lie if it presented itself. But that's what makes these fallacies so tricky. These are rules that everyone follows because that's what you've been told to do, year after year, generation after generation. But you can stop that cycle and start building a legacy of wealth. Galileo Galilei once said, "All truths are easy to understand once they are discovered. The point is to discover them." For the sake of a scientific mindset, let's get to discovering. You've probably learned how to trade by focusing on fundamental and technical analysis. These strategies require that you be on call at every moment so an opportunity doesn't pass you by. And this is especially true if you are a day trader. Then, in your free time, you need to research either the minute details of companies and industries or the trends and indicators of different stocks. You can't deny that these types of investing are exhausting, and worse, none of them consistently make money in the long term, which is disappointing considering the amount of effort and stress these types of trading require. The net result of both of these approaches is that you are convinced you have found the next big thing and decide to take a significant position in it, using 10 to 50% of your cash available. And that's if you consider yourself to be prudent. Otherwise, if you are extremely confident or like to live on the edge, you jump in with 90 to 100% of the cash you have available. And then you prepare to monitor that position every second of the day. 99% of a trader's stress is from trying to predict the market, and the remaining 1% of stress is from deciding how much to invest in an opportunity. But wait, you might be thinking, I'm not really any of those types. Or maybe you use a combination of methods, believing that dabbling in everything will get you the lucky break you've been hoping for. Either way, there is something you should be aware of. It's easy to fall into position trading. Sometimes a person doesn't even realize that their mindset has changed. Position trading can be very profitable, I can't deny that. But I promise, there is still a better, safer way of investing. One that doesn't force you to expect a loss when the markets are down. Losing type of thinking is ridiculous. Who wants to accept a loss of profits? Not me, and you shouldn't either. I've mentioned all these types of investing, technical, fundamental, position, and day trading for a reason. They all have their bright side, but their ugly dark side has a big shadow. And that shadow keeps people from staying in the game and winning. Let's take some time to explore this dark side so you can expose it for what it is. Fallacies. Recently, there was a text conversation between the stressless trading method inventor and one of his friends. His friend asked, "Has the market hit the bottom yet?" Being the curious type, he responded, "What decision are you trying to make?" The inventor wondered why the investor was so worried, because with the proper diversity, rock bottom wasn't much of a concern. The friend's predicament was very interesting. "I have used up all the cash in my trading account to buy more stocks, but the market is dropping since I made the last purchase." If the friend would have planned for this situation, he would not only have more cash to spend, but his mind would also be at ease. "So, you have no more cash to buy when the market is down?" The exact words of the friend were, "Yes, but not for this account. Not sure if I should move money here and lose that too, since we don't know how long it can go down." Clearly, this man didn't have clear goals. He seemed to be unconcerned about the money he had already invested and overly concerned about money he had yet to invest. So, who wins with this kind of unplanned investing? When there is a profit, the strategy takes credit and you feel like a lucky winner. But when the market takes a turn for the worse, you are the only one to blame. You become the dummy, the one who wasn't smart enough or quick enough to do something different. And if that is the case, then why have a strategy at all? With the stressless trading method, you get credit because you chose the method, and the method always wins in the long term. Should an investor expect to lose? As a position trader, you are told never to fully trust any strategy, since it could be wrong 40% of the time. So you lost 40% of the time, and you will spend another 30 to 40% of the time recovering from the loss. So that means that 80 to 90% of your time is spent just breaking even. Of course, no strategy guarantees that you will not lose your shirt. Any experienced trader will confess that markets are unpredictable. However, you should never normalize failure. The stressless trading method focuses on winning by using a systematic procedure with clear rules. What about the 2% rule? You've probably been told not to invest more than 2% in any single trade while day trading. If that's the case and the method is that risky, then why invest at all? Seriously, a 2% investment is barely a drop in the bucket of the type of wealth you're looking to build. Plus, as a day trader, you are expected to close all your positions at the end of the day, even if they are lossy. Think of the emotional drain that brings, even when each position is just 2% of your account. Should I be relying on a crystal ball? You are told you need to cling to the past and future. Instead of looking at the past and trying to predict the future, the stressless trading method looks at right now. And after all, right now is really all there is. As much as the investing world wants you to believe there's a crystal ball, there is not. Stop living in the past. Stop predicting the future. Live right now, in this moment. And every time you look at a stock price, it's decision time. Well, that is, if you have a plan to make decisions. The stressless trading method is based on science using mathematical rules of money management to invest in a stock whose business you inherently believe in. It is a systematic, logical way of assessing your financial decisions even as the stocks fluctuate due to market conditions and news. This method can reduce your stress, free up your time, and earn you the type of wealth you've been dreaming of.